Hi, I'm Danny LeBeau, and welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today, I'll be discussing the equity drop-off we saw today. The Dow shaving off over 250 points, and the Nasdaq down over 1.5%. Right here, we have the ETF of the Nasdaq, QQQ. You can see we traded down quite a bit in later morning hours and have traded a little bit back up in the afternoon trading session. So yesterday, the S&P 500 and Nasdaq both hit all-time highs, but the growing concerns surrounding the coronavirus's lasting effect on the economy has set investors back a little bit. Fund managers have seen substantial gains since the beginning of this year, and they're a little bit concerned that this coronavirus is going to be impacting some of their equities long term. The Nasdaq was up over 11% in the last month and a half. S&P was up over 5%, and investors are just pulling profits off the table, sitting on their hands and waiting for this coronavirus to shake out. And this may have created a buying opportunity for your favorite stocks. So just a little bit on what the coronavirus is actually doing. It has shut down a lot of China's major cities. China is the most populous country in the world and the second largest economy behind the U.S., and it's temporarily halted this economy's demands. Not to mention messing up supply chains for U.S. corporations who have operations in China. Apple came out and announced that their company will be cutting their March quarter revenue guidance as this coronavirus has negatively impacted not only their supply chain but their demands. So will coronavirus's impact be lasting? That is the question you'd ask yourself as an investor. And for most industries, it appears like it's not going to be lasting. It's only going to push back demand temporarily. China is right now dumping billions of dollars in economic stimulus into the economy, and they're just trying to keep the wheels turning amid the efforts to contain this virus. So what should you buy? Personally, I love chip stocks right now. Chip stocks like NVIDIA, Intel, TSMC, and all three of these stocks have dropped over 2.5% today, and I think have created a marginal buying opportunity. The reason I like these chip stocks is because they've had a huge amount of momentum going into them. This segment is hitting all-time highs, and cyclicality is finally turning in its favor. Hyperscaling is back in data centers as new chip technology is becoming a necessity to compete. One of the major catalysts for this is 5G technology, and hyperscaling is being pushed back into these data centers as 5G chips are needed to remain competitive. So there could be a further downside as the broader market is trading at very rich multiples right now. So I wouldn't put any large positions on, but a small position and averaging down if the market does continue to fall is a good strategy moving forward here. So thank you for watching the Fourth Revolution, and I look forward to speaking to you guys next time.